watch the numbers run. The market's dance has just begun. Lines and graphs, they tell the tale. Winners rise and losers pale. Options swing, the clock ticks loud. The screen's a storm, the trades are proud. Closing playbook, time to see what the markets gave for free. Nate and Kane, they break it down. The ups, the downs, the trades, the crown. The trades, the crown. The bell has rung, the dust has cleared. Dreams were made or disappeared. Candlesticks like fireworks fly. Risk and reward, they never lie. Charts don't sleep, they scream, they shout. Dive right in or you'll miss out. Closing playbook, time to see what the markets gave for free. Nate and Kane, they break it down. The ups, the downs, the trades, the crowd. The trades, the crowd. Closing playbook, time to see what the markets gave for free. Nate and Kane, they break it down. The ups, the downs, the trades, the crowd. The trades, the crowd.
Good afternoon, everyone. Welcome to the closing playbook for Thursday, June 25th. Hope you're having a good day. And hello to you, Mr. Shea. How are you?
I am doing well. How are you?
I'm doing well also.
Good. Market is maybe not as well as we might hope, but holding up. Let's see. Let's start. Let's get a chart on.
It was interesting if
Screen.
you I was talking this morning with Silas Peters, and I said, like, if you just kind of like got to the market late at like right around 10 o'clock, you'd be like, well, we're flat today, but you would have missed an entire like percent up and down by
Right.
10 a.m.
Yeah. Yeah. I've watched that gap up off of Micron earnings, some good economic data, but the market just took it as an opportunity to take some money off the table. And here we are just below the MA 50 now. We'll see. It's been playing around with that MA 50 all day. So maybe it will regain it, maybe it won't. If it closes below or closes right where it is right now, then we would want to see if it could regain by tomorrow. So we are getting pinched with these moving averages now with this MA 50, EMA 8, EMA 20. You can see we've been chopping in between them the last 3 days, but we have poked below on a few occasions. We haven't gotten above the MA 20 yet. Today it did get above the EMA 8, but that EMA 8 is sloping down. The EMA 20 also sloping down. So unless we get a real wave of bullishness soon, those are going to cross. And then we're definitely in a confirmed choppy sideways regime or a breaking down regime at that point in time. So we've been talking in the last few days about this. The shift in regime makes it more difficult for us to trade directionally. It's maybe if you go non-directional, it's okay. Or if you stay day trading, it's okay. But in terms of a swing trade, something that goes more than a couple of days, or even just more than overnight, then it is going to be difficult to call that just because you'll get whipped back and forth. So I would just say caution. Caution. Now is the time for more for cash and more for very short-term trades rather than trying to invest your cash and put it to work. If you're going to do income style, you better off high reward risk like a butterfly, or something that is very forgiving like an unbalanced condor. Those would be my choices in the current environment. So Micron, you can see Micron gapped up after earnings, and then it gave away a lot of it, filled about half the gap, and then came back up, but still not nearly as high as we were, but kind of matched this pre-earnings level over here, which is kind of interesting. And if you took Chris's trade yesterday, though, you're probably, if I remember correctly, you're sitting right in that profit trap area right now. So you don't want it to dip any lower, although you won't lose any money. If it dips lower, you'll just make a very small amount of money. But as of right now, you should be making a pretty good amount. I don't remember what his expiration was. Do you?
He was going a ways out on it.
Oh, okay. So
Yeah.
far out. So you're not looking at a huge amount of profits, but at least some profits in that one. So Micron pulled the market up. Obviously, the market sold off of it. Micron recovered a bit from that sell-off. They did come out with news that they're signing a bunch of contracts. I think there's a floor price in baked into those contracts. So they get their price no matter what. And that seems to mean that memory prices are going to be sticky. They're going to be high for a while. And even if supply comes back in, well, at least Micron gets to demand a higher price. So, that will probably keep the market elevated for a while. If we look into oil broke down below its MA 200. It's at 72. That is right around. So here, that initial gap up after the announcement that the US was attacking Iran, well, we're right there now. So we've traced all the way back. We haven't filled this gap yet. Well, I guess maybe. No, yeah, today's low did kind of halfway fill that gap. So that's really interesting that that's where we are in energy right now. We'll see if it can get to pre-war levels, but it was trending upwards before all of that happened anyway. So it being where it is right now is kind of a reasonable level. So if I draw this trend line right there and see that it was sort of headed in this trajectory anyways. So this is probably reasonable and good prices for energy levels, where we can stop thinking about energy as a catalyst in the market for now, unless something crazy happens. And then DXY, dollar. Dollar getting strong, really strong. And it's broke out of these levels. So that'll probably stay up there. That is a trend. And a higher dollar makes it more difficult for other assets. For example, the overall stock market. And so as long as the dollar is coming down, that it makes it a lot easier for the market to go up. The market can still go up, but it's just one less tailwind with the US dollar. But this is going to have a lot more direct impact on crude oil, on commodities, on gold, on silver. So let's take a look at gold. This should not be good news for gold at all. I don't know if there's any still gold bugs out there still, but yeah, gold has been breaking down.
I think they're hibernating.
Really? Yeah, and if we break below this current level, that is not great. So we have this kind of horizontal support right here. If that breaks, then we could be going down to like 340, maybe even 320. So it would give up basically this parabolic move that we got. We already gave it up, and then we might even give up at least part of the initial surge upwards. That'd be really interesting if that happens. I would probably be bullish on gold if that happens. If we get down to 340 to 320 area, I'll be
like one closing candle down there, one or two closing candles down there.
yeah. So I'll keep an eye on that. Or if we get a hard bounce off of the current level, I'd be. I guess if we regain this trend right here. Okay, so if we cross back above that line, I'll be bullish. Or if we trade all the way down to 340 or 320, I'd be bullish. Yeah.
It was interesting to me on SPY that the last 3 days, not the opens and close, but the full day candle wicks were almost identical. Like we had the same full day range uh, for the
Yep.
last 3 days,
Yeah. So that
which
chop.
like yeah, makes me feel like we might have had significantly different opens and closes, but like we're still basically in the exact same range as we were for the last 3 days.
Yeah. Yeah. That's that sideways or kind of transitioning regime that we've been talking about. So,
Yeah.
but this is it's lined up really, really, really well the last 3 days. You're right.
I
Yeah.
have a question for you, and it may be something that you don't even bother to follow, but with the Micron thing, locking in prices for relatively high prices for memory going forward. What's interesting to me is, that's going to affect companies like Nvidia and Microsoft and Apple and those kinds of companies because their cost just went up, and whatever contracts they have right now, they're going to have to now do future contracts to compensate and stuff like that. Do you think it's enough to have any effect on, something as strong as Nvidia, or does it not matter? We just follow the charts anyway, and it's too fundamental of a question for a technical trader, or, like,
Yeah, for something like Nvidia, I would say that just wait for the price action. But if you're talking retail, so Apple, anything that utilizes a lot of memory and chips on their and relies on retail sales, that would be a stronger catalyst for a downside move or higher price.
yeah.
If they can't pass on, well, they will pass on the
They'll pass
cost
it on,
to
but it'll be bad
consumer.
news for them, and their
Right.
stock price will take a hit. Apple already
Yeah.
announced prices going up.
Oh, they did. Yeah.
Yeah,
So yeah, consumers are they can only eat so much, and then so Apple is AAPL. Oh yeah, yeah. Apple did not like that. Let's see Microsoft because they gaming consoles. Yeah.
yeah.
Um, I don't know who else does gaming consoles anymore. The Sony, so I don't even Sony's not even like real stock anymore.
I don't even know
Is
if
that,
they do anything important anymore.
yeah.
They make TVs, I think. Uh,
Okay.
but the TV prices are have gone in the dumpster so bad that I don't even know how
Yeah.
they stay in business. But I guess I would say that the costs have gone down too. But since COVID, I'm not sure that they really ever recovered. But
Mm.
yeah, no, it's just interesting. Like a company like Micron, and I'm sure it's going to bring up any of the other memory companies. But the other tech companies they're gonna take hits. Not every tech company relies on memory chips, but the ones that do.
Yeah.
Yeah,
Yeah, so it'll definitely drag, but how immediate of a drag it'll be just depends on how close to the consumer the the company is.
yeah.
All
I
right,
guess
so let's
companies
take a
that sell compute power, they probably can just
mm,
raise their prices pretty quickly because it's a service. They're not selling
right,
chips. It's just a service, and they can just, I mean, they may be contracted for a particular period of time, but their hardware cost isn't going up on what they're currently contracted on because they're not selling the hardware. They're just
right.
selling the
Yeah,
service on the
yeah,
hardware they already own. So it would be future contracts that would go up in price, and they can adjust. I think they can pivot more quickly than the hardware um, retailers.
yeah, yeah, that's right. All right. Let's see. What else were we going to look at? There was something I know I was going to look for an overnight trade because overnight, or like I said, a butterfly or unbalanced condor, that's probably the most appropriate
You
thing
were going
right
to talk
now.
about Nate's volatility discussion from
Oh,
yesterday.
yeah. Okay. So let's take a look
But if you want
at
to
the
do the trade
overall.
first because of the time, maybe that's a better order of
Okay,
operations.
that might make sense. Yeah. Good call. Let me run a quick scan over here and see what we can find. Biotech is the strongest sector. Yeah, I think it's still up today. Yeah, still up today. It is getting a little extra. At least it's not going parabolic. It's still linear, but it is a very steep slope
Linear
linearity.
on steroids.
Yeah.
Not quite
So I was
parabolic,
gonna look
but
for overnight trade tomorrow, Friday. It might be this close to and we might not find anything that's all that juicy, but we'll look anyways. Oh my, it's not running. Why isn't it running? I might have a data source issue.
on Gex.
It's my own. It's
Oh,
something
you're.
I'm working on.
I got you.
Yeah, yeah, it's not running. Okay, well, there goes that idea. Let's look for something else. uh,
Well, we have. I don't know if it's anything you follow. Wise WSE has earnings. No, yeah, just
w,
WSE.
WS.
They've been in a little bit of a dumpster. They're a fintech company, so they do. It's a British company, and they do um, like internet. They do the tech behind international money transfers.
Gotcha.
I didn't know if that was anything you ever follow or not, but they have earnings, and they've been pretty low. Well, you can see the chart, but
Yeah,
um, they were on a little bit of a comeback, and then it kind of chopped out.
got it. Well, they don't. So they
I'm
only
not
have
sure they have
monthly
any real volume though.
expirations. Yeah.
I didn't
Anything
even
else
look
going on?
into them or anything. I just saw that they had earnings, and I'm familiar with what they do.
Gotcha. Thoughts on SpaceX? Let's take a look. Yeah, I mean, you're back in at these kind of where it opened up after the IPO. So this is a good area to take a stab at it, just because the date for it being added to the Nasdaq 100 is coming up. I believe July 2nd. So in about a week, actually, almost exactly a week. So yeah, I mean, I would be willing to take a stab right here. Um, let's see what SpaceX.
Would you get out of SpaceX right before the 90-day window where the original buyers can now dump their shares?
Probably.
Like at
I
day
would, or at
89.
least take a partial. Yeah, I would. Yeah, at least reduce my position. Yeah,
Yeah.
for sure. Um, so if we do just say maybe I could sell a put. So if I sold a put into July 2nd, so July 2nd. Oh, I guess because next week's a holiday. That's why. Okay.
Oh yeah, it
So
is.
maybe I'll go one
Yeah.
1 week after. Sell a put at, I don't know, where would you like to own it? 145, 140? I wouldn't do too many contracts of this, but let's see what we can get paid over here. Oh wow, you can get paid quite a bit. um, but that'd be 15,000 or 14,000. So if I did 140, if you could get 370, 370 on 14,000, that's 2.6% in 15 days, 2 weeks. That's roughly 5% a month. It's really like 60% year annualized. That is really good. That is really good. But that's only if you're willing to own it.
Uh,
So you've got 14,000 in cash to actually buy it, 100 shares. And if you're willing to own it at 140. I would. I mean, if it fit in your account. So allocation size, if it was 1%. So if you have at least $150,000 account, I'd be willing to sell a contract here. I don't, because it's a lot of cash. I'm not going to officially, put that out there because I don't think a lot of people are going to be doing that. But you could do a callback ratio, like Chris's favorite way to pick up really cheap shares. We could do one of those, but that'll take a little while to construct. I don't know if we could do that in the next 10 minutes. So let's see if we can find something else, something chopping into tomorrow. I'm not going to be able to find something overnight. I really needed my scan over here. That's not working. All right, so let's look at something else. Let's look at SPY. Can I count on it consolidating for another week? Be a little risky. Let's see if we could get, what is this? 760, 720. $760 is really out there. And then we did that out to July 2nd. See what that's paying. Okay, not bad. 25% for that large of a range on a week. I like it. I wouldn't go size, but pick up let's see, you're risking $80. So on just say you had a $5,000 account, you wanted to risk, say, if it was 1%, you risk 50, 2%, you risk 100. So on a $5,000 account, I would risk 1 to 2 lots of this. So let's go ahead and throw that in there. So let's go closing playbook, SPY. I'll do 2. So we've got out to July 2nd. And we were at 720. So selling 720 put, buying the 719 put, selling the 760 call, and buying the 761 call for 22 cents a credit. Looks like right now, up down to 20. Come on. There you go, 22. Let's try 22 cents a credit. $21. 21. Got it at 21. So let me save this.
So you're risking about 79 bucks.
Yeah.
Per contract. Max profit 21 bucks.
It's a good trade, I think. Okay. And let's see, I think some people called out a few things they wanted me to look at. LLY. Is that the only one? Nintendo. If Nintendo had stock, I would short it. ADPT. And let's look at LLY. LLY chopping sideways. Okay, yeah, this would be one that you could build an Iron Condor around as well. So if we did like 1180-ish to 1075-ish, let's see if 1075. And probably we don't even need to go this wide. But let's just see if this pays anything. Actually, well, it's not very liquid. So we're just going to have large bid ask, but 145 divided by 355. Is if we can get it, it pays really well, or really, really well. But I kind of doubt we can get it. Let's try it. Got 1075 and 1180, correct? Yeah, 1075
Yep.
and 11. And 75 and 11. Yeah, their bid asks are huge over here. Let's try for one. Yeah. But even if you could get $1, that's still 25% or 20%, 25%. Or you got to be willing. I got in at $1.35. You got to be willing to hold it to expiration though. So we got to be willing to take the max loss because it's so illiquid. I mean, conceivably you could get out, but it might be difficult. The closer you get to expiration, it's probably more and more difficult to get out. So you got to be willing to eat the 355 or $65.
365. Yeah.
So let me adjust this. That's the 0.5. Okay, so whoever gave us LLY, thank you. Okay. And someone's asking for GLW. GLW is bullish. I was looking at that earlier. A little far too fast because it just broke out. So I'd be looking for this to consolidate or pull back a little bit. So I'd be more interested in if it pulled back a little bit, right? Just a little bit, just come back a little bit. That's a better entry because it moves so fast. Otherwise, you're really far from the MAs. And if it does pull all the way back to an MA, then you're eating it. But here, if it comes down to here and it pulls back to MA, then it's not so bad. Okay. And then there was someone AD as something. Was there another one? ADPT. Oops. Adaptive biotech. Okay. Interesting. Looking good. Much better entry yesterday. Obviously, it did break out of this high. Okay, we are mild horizontal resistance here. If it can break out of today's high, basically, then I would go for it. I would trade this as a breakout or a pull back to the breakout level. So, of course, if it fails, then you might consider something at an EMA 8 to see if it retests that. So that could be a good short-term trade. So if it pulls back to EMA 8, just retrade it back up to the high and then take your profit and then see if it breaks out to see if you have another breakout trade. So that's how I trade at ADPT. You got to be careful because the biotech sector in general is getting overextended. It's not too bad yet, but it is getting there. So those two combined, the fact that we're hitting a resistance and that the entire sector is a little overstretched at the moment, makes me say, okay, well, now this moment isn't a great entry. Either wait for that pullback or wait for a breakout confirmation. Okay. Your brief bullseye XSP 1 wide and 2 wide, longest 5 minutes in the world. How are we doing on it? XSP. Oh, we're right on top of that pin. Okay. We're right there. And what happened to my sheet isn't updating. Let me reopen that. Lost my sheet. Oh, yeah. I mean, if we close right now, the 1 wide XSP is, you're looking at 5 to 600 plus percent. So we'll see. Unfortunately, I traded SPX, which is not cooperating, but the XSP level. You know what's really interesting, and I'm going to send this out to my bullseye trade members. I was looking at the number. That was this spreadsheet over here, but the accuracy, surprisingly, because before we said SPY or SPX would be the most accurate, but if we look at XSP, look at this 1 wide, even though it's over here, like 3 wide, 4 wide, one, it's 4.6 or 4.2 profit factor, 3.4, 2.26. If we compare that to SPX, see, SPX is about 2.5 to 2.8 all across the three of them. And SPY is 3.5, 1.91. And so SPY on the 1 wide has been the worst. So XSP has actually been the star, which is very surprising to me. But like, for example, all week this week, the XSP has been nailing it, whereas the other two have been kind of good or just completely not that great. So XSP, we closed at, last minute tiny little surge gap up right there, but 735.8, still a good pin. Unfortunately, it destroyed that 500 or 600% down to 54% on the 1 wide and 135% on the 2 wide. But still, not bad, not bad a return.
Wait, you got less of a return on the 1 wide?
Yeah, just because of the pricing, because of
where you got in it on
it. Yeah, and also because it was so close, because XSP ended at 7. This is delayed on TradingView for some reason. If we look over here at XSP, we wanted to pin at 735 and it went to 0.8. So that's, if we're doing 1 wide, then that's only 0.2 away from basically the whole thing's worthless. Yeah. So we got in at 0.13, which means you only made 7 cents on it. 7 cents, you got 20.
As you get closer to the pin, it gets more parabolically better for you, but then it quickly gets worse the other way.
Yeah. So it's too close to the edge on the 1 wide versus the 2 wide. So the 2 wide did a lot better.
Okay, profit's profit.
Yep. All right. Well, I mean, it's not a bad return though. So we got a couple of good trades. I really like the LLY trade. I think is great. It's because it's not moving that much. It's not that volatile. So I guess this is what we wanted to talk about with the continuation of Nate's volatility trade. So maybe we'll do it tomorrow. But you see, we got this really wide range. That range is, call it like a 10% range. So it's 111 roughly, maybe 110 points of that wide of a range. And if we look at what happened to there we go. ATRs. Oh, it's right there. My ATR is 34. So that is 3 ATR distance. And I was able, it takes a lot of movement in order for us to break out of this, especially in just, 2 weeks?
Yeah, not even, yeah.
Yeah. So on average, a stock in the S&P 500 will travel like close to close will travel maybe 1.5 ATR in a week, 1.5 daily ATRs in a week. 2 would be a lot. 3 would be like unprecedented. It would be really moving. It would be a huge catalyst. So for it to travel 3 ATRs in 2 weeks is not too likely. And
Yeah,
because
the Lilly one or the LOI one was only 1 week. We got July 2nd on that one
oh, great. Oh, even better.
because
Okay.
you had to do the July 10 on the other one,
Oh,
but you did
gotcha.
July 2nd on that one.
Okay. Yeah, perfect. So for three ATRs, so you've got at least at 1.5 ATR in each direction, assuming we hit the middle, which we're pretty close to it. Then the likelihood of it. So if we, for example, if we did a weekly ATR, we said, what's that ATR? Would be 75, right? And we gave it 110. So it's still well beyond the weekly ATR. So the chances of us moving out of that is very low. And we got paid really, really well for it. And the reason we got paid really well for it is, one, because of the wide bid ask, we were able to take advantage of a wide bid ask situation. Usually that works against you, but in this case, it worked for us. And also because overall in the market, there's a lot of volatility. It just in this individual name, there's not a huge amount of volatility, but the options still have a lot of volatility in them. So those are the reasons why we were able to get something that it pays so well. So
And
135
it working
divided
for
by-
you instead of against you. It's just luck as to whether you can get in it, right? I mean, there's no real
That's right.
no
Yeah.
no real way to know that.
Yeah, you just got to try and
Yeah.
then and be willing to work within that space. So a lot of people, they need price certainty. And if you need price certainty, you're not going to be able to take advantage of opportunities like this, because what you're getting paid for in this case is that vagueness of price, and knowing that when you exit, you're also probably going to have even worse vagueness of price. And that's why I said you got to be willing to hang on to it all the way till the end, because then when everything expires, there's zero vagueness anymore. It's all settlement math. This looks like a question. What motivates giant candles at 359? You mean, let's do SPX. This versus that. It's just last minute positioning and orders getting filled. And then the market maker. So it's a jockeying between the market maker and the large institutions that are getting things filled last minute. And then whoever exerts stronger influence, that's just where it ends up. So I'll give you an example of story back on my Wall Street days. So, and this is not a unique story, but my strongest memory is of the first time it happened to me. So, about 4 minutes before the market closed, I had an assistant come up to me and said, "Kane, we messed up. There's about 500 million in cash that didn't get invested." And I was like, "What?" So yeah, we gave you the wrong numbers. We need to invest another 500 million in cash. And then he started to go into this, oh, it's because of this and this, and then all a million and one excuses. And I just told him, stop, right? Just tell me who I can and cannot trade with. Right? And so he told me who I could and could not trade with. And I just started hitting the phones and trying to get $500 million invested in the last 4 minutes of the market. And I only got about 75 million invested. So 425 went uninvested. But the point is that I had to act as quickly as possible, and getting 75 million invested and instead of zero invested was a lot better than just letting the whole thing fall apart. So there are instances like that where in the last couple minutes oh my God, something fell through the cracks, where you just got to get something done. And so I just had to just lift every offer that I got in those last 4 minutes. And just it didn't really matter what the price was at that point. And I just kept on lifting until I ran out of time. So that a lot of instances like that will cause these large candles towards the end. And the opening is similar, but not as extreme. It's just we're trying to raise cash or get usually raise cash because of redemptions that happened overnight. So that's why.
How much do you think people try and get out of, like, how much volume do you think there is of people trying to get out of spreads before the market closes, like that are expiring today?
How many? How many? Say
Like
that
how many
again.
options are being, how many spreads are being exited right before
Oh, right.
close
Yeah,
because they're
exactly.
going to expire?
Yeah, there's are people who are not willing. So sometimes you guys, freak out and say, "Oh my God, it looks like I'm going to miss my my spread. I'm going to lose on it, or I want to lock in a gain a couple minutes before because I'm afraid of those last couple of minutes where something crazy might happen." So uh, you'll get people all that mad volume right at the last few minutes
Is there,
as
is there
well.
enough of that going on with options to move the price?
Oh yeah, for sure, for sure. Zero DT now. Like if you asked me a year ago, I would
Oh
say
yeah,
no,
right, because
but
it's
now,
jumped
yeah,
so much.
yeah, now for sure. Yeah.
Yeah.
Okay, looks like
And it's not
one
even
last
just
question.
zero DTE. They could have taken it, they could have bought it any day and it's just
Right.
expiring today. Now, ever since they went to 1 day, daily options,
Yeah,
there's,
exactly.
yeah.
Yeah. Okay, so bought a two wide and a three wide, closed my two wide early. So then my broker broke out three wide order into three individual orders. Yeah, it doesn't matter if your order got broken into many orders. It doesn't matter because you have the exact same position. So at settlement, you have the same position. It's it doesn't matter how you got into it. So basically, you were legged into either. I don't know if they broke up in number of lots or if they broke it in your legs, and it doesn't really matter. But either you were legged into a butterfly or you just executed an entire butterfly. It doesn't matter. You still hold the butterfly. Okay, and I've gone over this a million times. When you are holding something to expiration, this is really good for everyone. Okay, when you hold a position to expiration, do not look at your broker's P&L statement, but like their
Yeah.
reported P&L, because they are reporting on bid ask. So they're assuming, oh, if you sold out of it, if you close it right now, this is what you would get for it. Okay, but at settlement, that doesn't matter anymore. Bid ask is irrelevant, and bid ask goes wild in the last couple of minutes, just like all this crazy activity, and spreads go wild the last couple of minutes right before expiration, especially if you're doing something that is expiring today. Those numbers get really, really crazy. So the P&L will be wrong, just flat out wrong. 100% of the time, that bid ask P&L is going to be wrong if you're holding it all the way to expiration and settlement. So it doesn't matter if it's a iron condor or a vertical or a calendar, or it doesn't matter, or butterfly. It's going to be wrong. So you need to rely on settlement math. If you don't know your settlement math, then get a settlement math calculator. If you're in my programs, I provide that for you, and use that settlement math calculator. Don't rely on what your broker says your P&L is. Yeah. Okay. One last question. When do I think Bitcoin will bottom? Oof. Not yet. That's the answer. Uh, it's like today was not a good day for it. If it continues down, it looks like we could hit 52,000. That's the line I drew over here, or maybe slightly higher. Okay, maybe like 55,000 or 52,000. But it doesn't look like this is not a bottoming pattern. So it's not, we're not there yet. Okay. All right, guys, that's all we got for today. Happy Thursday. Tomorrow's Friday. I hope you guys have
Yeah.
been having a good week.
Yeah. Don't forget next Friday, not tomorrow, but a week from tomorrow, market's closed. So we got a short week next week. But we'll see you tomorrow. Thanks, Kane.
Okay. All right. I guess.